Hey guys, thank you for joining us. I guess I'll say this morning, it's still morning time. But this is another installment of the McGee Firm's interview with the experts. And so I want to let you guys know that are watching live, we will do a question and answer at the end. So if you have any questions for our guests when we get to the end of this today, we will do a Q&A. For those of you that are not watching this live, who will be watching this on social media and YouTube later on in time, we'll give you the information to contact our guest where you can contact him personally to ask questions. But today, very happy to have Carson Graves from Retirement Education Center here in DFW. So Carson's somebody that I've known for a few years. We've had some clients in common and done some presentations together. So know him pretty well. He's a fellow TCU Horned Frog, so always happy to include our fellow Horned Frogs here in the mix. But Carson, go ahead and kind of tell us before we get into the subject matter here, what is your academic and your professional background, your professional certifications?
Yeah, thank you, Brandon. First of all, Brandon, thank you again for having me on. Yeah, I've been in this industry, Brandon, for 25 years now. I'm an independent fiduciary. I'm also a certified financial planner. And so my background has been finance. When I graduated from TCU, that was my major, and I've stayed in that particular background pretty much my entire career. Now, I've been really, really blessed to be able to have had exposure in all sectors of finance. I've worked in banking, I've worked in insurance planning, I've worked in real estate. I've actually, of course, worked in investment planning as well with Charles Schwab. And so I have an extensive background in helping people retire. And that's our specialty, making sure that we give people the ability to retire with confidence and understand exactly what they should do, and more importantly, what they shouldn't be doing.
Okay.
And so that's our special background as far as helping people retire with the tools that they need to have success in their retirement years.
Okay, so you have a varied background in finance, investment, and certified financial planner, right?
Absolutely.
And most important, you're a TCU Horned Frog from the
That's
Neely School of Business.
Absolutely, you know it.
That's awesome. Okay, so tell us with your firm, just generally, and guys, so that you know kind of the lay of the land here, we're first going to talk to Carson about kind of his general approach with his clientele, the things that they focus on, the things that they can help with. And then we're going to get into a very specific niche topic at the end, which is retirement for federal employees. But tell us, when you first meet a client, whether or not they're a federal former employee or not, kind of tell us how that goes and what are the things that you guys focus on.
Yeah, sure. When we first meet a client, we want to know a little bit about them. We want to know first and foremost about how is their budget running, because I think that gets overlooked. Some of the things when you're talking about retirement planning, Brandon, they get too complex for people. And our specialty is making sure that we keep things simple. My clients understand this. I'm sure some of my clients are watching now. We try to keep things in layman's terms. So we want to know exactly what your budget is looking like first, because your retirement budget must match your retirement income.
Right.
And so once we know what your expenses are, we also want to know what your risk tolerance is.
Okay.
Are you more risk adverse, meaning that you don't want to take on a lot of risk in retirement, or are you still trying to, I would say, try to combat inflation and have some growth mechanisms in your portfolio? So once we know your risk, your expenses, and we know your risk tolerance, then we can start focusing on your short, mid, and long-term goals.
Okay.
And that's our focus in our platform. And once we can get a chance to get those elements together, Brandon, what we're going to do is build a retirement plan.
Okay.
Now, we don't sell products to our clients. We literally try to position advisory information to them so they can actually be implemented in a succinct retirement plan.
Okay.
So that's probably what's going to separate us from maybe that financial salesman that a lot of people unfortunately come to know at times in their journey to get to retirement.
Okay, and let's talk about this. So there might be some people that they're of an age where they feel like retirement's many years off, and but in your estimation, when is the best time to first start focusing on retirement?
I would tell you this, like we did our kids, as soon as the doctor spank. When you hear the whining, that's the first time to start thinking about retirement, because
Okay.
when you're actually younger, you have the biggest asset of all, and that's time.
Yes.
And so if you can
Right.
start thinking about retiring early, You can do what someone who may have delayed that process, you can do what they do and having to do so much more of with less.
Okay.
And so the first thing you should be doing when you get an opportunity to have earned income is to start thinking about, where should I be saving? You should be getting a financial advisor who can advise you on what you should be doing and what you should not be doing, for
Yeah.
sure.
And I like that. The biggest advantage you have when you're young is time.
It's
You
time.
know,
It's your most valuable asset.
and so, but I'm sure you have people coming to you as well who maybe they were just so focused on their profession, they were so focused on their career, raising their family, that they're middle-aged or even into their senior years, and they maybe that's something they really did not focus on, something they delayed. Do you see that quite a bit too?
I see it a lot, and primarily because when people are starting out their careers, one, they're not at their highest earning potential, and two, unfortunately, we got a chance, as you mentioned, to go to TCU, and I was fortunate not to have debt coming out of college. But unfortunately, so many people who pursue a career in college and they come out, they're loaded with a lot of debt, and so they're focusing on that and trying to get that down as well. And so they put retirement savings and these other important avenues that's going to take care of them on the back end on the back burner.
Right.
And so they really should, and as soon as you get your opportunity to start earning income, they really should start thinking about, how do I start to prioritize these things? Because there are methods to it. I mean, we understand that you have to know that some of that debt has to come down, and what you can do about that. But there are so many rules now that are taking place. We can at least allow, a lot of these people that we meet, Brandon, to ask the right questions to their employer. Maybe there's some assistance in getting debt down. So you have to be cognizant of the fact that there is help out there, and not just do what I see so many people do, stick their head in the sand and just hope
Right.
that things are going to work out. And I can tell you,
Yeah.
hope is absolutely not a plan.
Right, yeah. So, if just kind of let me ask you this: if you're talking to somebody who's 31 and they're at the very beginning of this process, and you're talking to somebody who's let's say 58 and they want to retire in 7 years,
Yeah.
how is that conversation different between the 58-year-old and the 31-year-old?
Yeah, you'll be surprised. I mean, the conversation is very similar for both.
Okay.
It's very similar. It's just that the priorities have shifted.
Yeah.
So in one instance, you have the 31-year-old who's going to be focusing on growing their asset. And then you have, like the 58-year-old who's going to be talking about protecting their assets and trying to look at income planning from that standpoint. And so the conversation is always going to be about portfolio management, money management. And so if you're 31 and you're 58, the primary goal is still going to be to structure your dollars to where it's going to be able to do the things that it's supposed to do for you at that particular time.
Okay.
So the conversation is only different in the sense of shifting the priorities around.
Got it.
But it's still going to be the same methods that's going to be applied to that individual. We still need to be saving money, which a lot of people sometimes have a misconception about, that once you get to retirement, it's time to stop saving. Each person should be saving. It's just, where should they be allocating those saving dollars? And so that's how I would scope that conversation.
And let's talk a little bit about insurance products, namely life insurance and long-term care. And my understanding is you do advise on these products. Is that correct?
Absolutely.
And what's just kind of give us generally here your opinion on the importance of good long-term care policy and a good life insurance policy. What's kind of the advice you give your clients there?
Yeah, the advice I give clients now, and I started out my career working at Northwestern Mutual. So I started out my career basically in the insurance realm.
Okay.
And so I know quite a bit about life insurance and how to scope it. One of the things I would tell people now is that the life insurance and long-term care landscape has actually changed quite a bit. And so what we typically allow people to do is first have to see, what exactly are you trying to protect?
Right.
Are you only trying to protect dying, or are you trying to protect dying and living?
Right.
If you're trying to protect dying and living, which I would absolutely advise to do, because now the biggest risk for most people, Brandon, is not dying too soon, but it's living too long, as you may know. And so when we're talking about long-term care and life insurance, you don't have to choose now. Okay. I think that's one of the things that has caught people in the past of, hey, you know what? I have this life insurance and someone is just going to benefit on my death. I don't really like that feeling. And in certain communities, that's very prevalent, and it should be. Absolutely need to get educated on it. Yeah. That's not really the case. You have to think about your loved ones in a different manner. But with that being said, you don't have to choose now. Okay. You can literally have hybrid plans with life insurance, including long-term care, meaning that one of those two things are going to happen. You're going to either pass away or you're going to live long enough to where you may have a long-term care situation.
Right.
And if you're watching and you're 65 and older right now, you have a 7 out of 10 chance of actually having some sort of long-term care issue in your life.
Right.
It's a 70% chance that we're going to have a long-term care situation. So you don't need to choose between the two. You need to have maybe a hybrid plan that can be inclusive. So when any of those elements happen in your retirement, you're prepared for it.
And let's talk about this because I get asked this a lot and I don't always have a great answer, but at what age would you say to somebody, you know what, this is not even worth looking into this, let's say a hybrid policy, life insurance, long-term care. Is there an age limit where we say, don't even bother looking into it, you've waited too long, you're too old? Or what are your thoughts on that?
That's such a good question because in the past, we would have said, okay, if you're focusing on long-term care, maybe we don't need to wait to start looking at this until maybe age 55, early 60s.
Right.
But now, because you're able to couple your long-term care with your life insurance,
You might as well do it early.
it will be so much more advantageous for people to actually do it as soon as possible.
Okay.
As soon as possible, because what's going to happen is that, as we mentioned before, time is your biggest friend.
Yeah.
And then when you're talking about life insurance and long-term care, when you wait, it's going to get more expensive, and more or less, you never know what the future holds. You can become uninsurable as well,
Right.
and therefore you can't qualify for any of it.
So if you have serious health problems, right?
If you have serious health problems, you're not going to be able to qualify for it. So we would advise anyone to start looking at those type of tools right away.
Okay. And then let's talk a little bit, actually more than a little bit, let's talk a lot about one of the niches that you have an expertise in. Yeah, I know you have an expertise in a lot of different areas here, but one of them that I think is less common because we have, a lot of advisors and planners, they can advise on insurance and retirement, but you have a niche in federal employee retirement. Is that correct?
Yeah, we do. I have worked with federal employees pretty much my whole career.
Okay.
And one of the things I want to make known to those who are watching is that, this is not a one person show. We do have a very extensive team that we work with. We have a full planning team, a 400-person back office team that we are allowed to utilize for our clients. But the thing about the federal employee space, Brandon, is that it's very unique. I've worked with federal and private sector clients. But the federal space is so unique. They have so many different options that they can choose from when it comes to their benefits. And so when you're talking about, retiring as a federal employee, you're going to have to think about your pension. You get a chance to think about Social Security. And you also have that thing called a TSP account, a thrift savings plan, which is pretty similar if you're in the private sector to a 401k.
Yeah.
They have similar elements there. The 401k is a little bit more flexible than a TSP plan, but they're very similar in the fact that you put money in and you get a match from your employer, so to speak.
Okay.
But in the federal space, the thing that is so, I think that is so great, I always tell people that I'm talking to that if I were to die and come back, I would come back as a federal employee because they have so many great benefits that they are allowed to keep. But first and foremost, the pension. I mean, if you look back, Brandon, 20, 25 years ago, 59 to 60% of private sector Fortune 500 companies actually offered a defined benefit plan or pension for their employees. You fast forward to today, less than 14% of those Fortune 500 companies are offering pensions. So what they did in the early 70s is that they switched from having that pension in the private sector to 401ks, basically leaving the employees to kind of fend for themselves in retirement. But in the federal space, you still have all legs of your retirement at your discretion. Okay. So you have the opportunity for a pension. You have the opportunity to actually take Social Security if you were hired after 1984. Okay. And you also have the opportunity to have that TSP to be an additional savings tool to help with income planning as well. Okay.
And so let's talk a little bit more about that what some of the advice that you can give to federal employees to really help them maximize that. And let's also talk about this kind of with it is, maybe somebody comes to you in the middle of their tenure, or maybe somebody comes to you right when they're finished.
Yep.
How does your conversation differ based on whether or not that federal employee is still working or is now actually retired?
Okay, good. So here's the thing, we obviously, when you retire as a federal employee, you come to us at that point. we're going to be limited as far as on what we can tell you to do at that moment, because you would have had to have made some decisions, some very, very permanent, important decisions before you retired. But nevertheless, we've worked with many federal employees after they retire because they still have retirement savings. They may still have money in the TSP account. And so we're limited on that situation there, but we're still able to help them with maybe long-term care, helping them roll over the TSP and diversifying that particular plan. Before you retire as a federal employee, that is where we can do the most magic for that particular person.
Okay.
Because now we can tell you when to retire. We can tell you exactly what your pension is going to be. If you wanted to retire early, you have to be careful because we can tell you that we can show you on a report what that penalty may be. So, there's so many different rules for the federal state,
Right.
Brandon. So, for instance, if you're a special provision employee, for instance, that's a firefighter, police officer, if you're an air traffic controller, you can literally retire with 20 years of service at the age of 50. So you have a lot of things to think about there. You can retire at any age with 25 years of service. But then they go into regular employees, Brandon, where you have what they call this minimum retirement age. And so let's just say your minimum retirement age is between 56 and 57. You need 30 years of service there. But if you have less than 30 years and you decide to go ahead and retire,
Right.
you can do it, but you're going to have a permanent penalty on that pension.
Okay.
So you have to start thinking, is that worth it to me?
Right.
What are my options there? And we can help people understand what those options are.
Okay.
Yes, you can retire, but maybe you postpone that retirement until you hit an age where you're eligible to get your full benefits without a penalty.
Okay.
So we can help people scope that out. And you say, well, what am I going to do about income? That's where we can help individuals and say, look, when you have this TSP account here, here's your bridge. If they say, well, I'm under the age where I may get penalized, we can help them understand the rules there.
Okay.
55 and older, you have the ability to access that pension or your TSP account without having that penalty on your TSP for taking it under age 59 and a half. So there's so many rules. It's very detailed, but you have to have someone who's knowledgeable in these areas, because if you make a mistake, it's permanent. You can't go back and change that. And so,
basically, the younger the federal employee is, the earlier we pre-plan, the more options we have, the better things can go.
The better things can go. And in the federal space, I mean, in the private sector, you can't think about literally retiring at 50. Okay. You can't think about retiring at 56 unless you've done some excellent saving and you've done some strategies along the way that's going to allow you to do that. But in the federal space, you have that ability to do so with the pension. So, but you have to make sure that you do it at the right time and you do it with the knowledge of understanding how all of your numbers come together.
But even if somebody, let's say they find you a year after they retire and they say, hey, sorry, I didn't know about you until now. Is there anything you can do for me in terms of advice to help? There is still some advice to help them with their federal retirement?
Absolutely, because here's why. Well, we always tell people, your numbers. So 88% of consumers have never had a written retirement plan. And so if someone comes to me after they've retired, we can take a look at what benefits did you choose that you may decide to let go of.
Okay.
For instance, in the private sector, you're not able to keep your life insurance.
Right.
And as a federal employee, you can keep that life insurance, but there's an element of it that can get so expensive, you will not be able to. They're going to push you out of it, right?
Okay.
For instance, I had a client come in my office last night. She was a federal employee. She had already retired, and she had her federal life insurance checked off to keep that Part B. There's a basic coverage and there's a Part B coverage that you can keep. The basic is fine. It's going to stay level, but that Part B coverage is going to get so expensive that at some point it may be more costly to pay for that monthly than what your actual pension is per month.
Okay.
So you have to get some advice around that, and we can let you know, hey, let's cut your costs right now while you're young and healthy, and maybe get into an actual plan that's going to be more beneficial for you.
Okay. And let me ask you this. What are the main areas of federal employee benefits that a federal employee should focus on? So let's say it's somebody that's not yet retired.
Sure.
Somebody, maybe they find you 10 years in, to their career. What are the main areas that you would kind of help them focus on?
Yeah, the main areas we've already kind of spoken on it is, one, let's just start with that pension. That's the most important thing. Is first and foremost, you need to understand how your pension is going to operate when you retire. The biggest part about this is that, consider this right here. If you're an MRA person, minimum retirement age, and you only have 10 years of service, and you decide to retire because you can do it with 10 years of service,
right.
You're age 57. Well, if you retire and start taking that pension immediately, Brandon, there's a 5% penalty for every year under the age of 62.
Okay.
So that's a 25% penalty on your pension for life. And so we have to scope that out and say, look, maybe you postpone your retirement to 62 and you have no penalty on that particular pension. And another thing that if you're a married couple and you have this pension, you have three options with it. You have an option to say, I'm going to protect none of it.
Okay.
You have an option to where you can protect 25% of it. That's the minimum amount. Then you have an option to where you can protect 50% of it. That's the maximum amount that you can protect for a spouse.
Meaning pass on to them after you die.
Pass on to them after they die. And so, for instance, if you decide in this equation with your spouse that you're not going to protect any of it, but that spouse is going to remain on your federal health benefits, Brandon.
Yeah.
If you were to pass away, that spouse loses those benefits, and those are very, very good benefits. Now, if you decide to protect 25% of it, just know it's going to cost your pension 5% per month.
Okay.
So you're going to pay that for life for that spouse to be able to have 25% of that pension when you die. If you protect 50% of that pension, it's going to cost you 10% per month of your pension to have that protection for that spouse. So the main ingredient here is that, yeah, you may sit as a federal employee and say, well, hey, I'm the person with all the knowledge. I make all the decisions in the household. I'm the financial person, whatever it may be. But here's the thing: when it comes to that pension, you may say, well, I'm not going to protect any of it. I got my spouse in my other benefits. You can't make that decision.
Okay.
Your spouse has to sign off on that, on the ideal of not getting the full 50% of that pension. So if you want to give 25% or zero,
that may change your game plan.
Yeah, you have to change your game plan because that you have no say in that matter as far as what's going to happen.
And then with, I don't, admittedly, I don't know a whole lot about federal retirement benefits, but are any of those benefits subject to passing down to children? Or is it mainly where it's just going to go to the spouse potentially?
It's going to mainly go to the spouse, and you can pass it down to your kids, but it is so costly. It doesn't make sense. No, you would be so much better off getting just a life insurance plan that you want to leave to your estate in order to make that happen. And I know a lot of people look at this, Brandon, when we're talking to a married couple, we're trying to help them understand the mechanics here. But we can also give them some very unique strategy ideas to where we can put literally, tens of thousands of dollars back into their pockets. Because here's a scenario that I want people to consider, and especially people in the federal space. Imagine that you're protecting that pension, 50% of it over the years. You may, your spouse that you're protecting it for obviously could die before you. Well, you may have protected that pension over years with a cumulative amount of dollars of $50,000 to $100,000, depending on when that spouse passes away. Guess where that money goes? It goes to the federal government. You've already given the government a lot of your time, effort, and money, and they're going to take another bite out of you at that particular situation. Well, you can't completely get rid of that expense, but we may help you say, look, you can protect 25% of it, maybe do some other gap planning where you can save tens of thousands of dollars because you have another piece of your retirement plan that's in place that will be left to that spouse and be able to provide the income supplement that they need.
I'm thinking this might get really interesting, and your expertise in this arena may become even more important when you have maybe a married couple and one spouse is a federal employee and the other works in the private sector. Or if you have an individual who maybe they work for the federal government for 20 years, then they take a job in the private sector, or vice versa. So they kind of have like hybrid retirement assets. How does that look?
Yeah, it looks great if you get the right information and depending on where you go and seek employment. But see, you only have to work in the public sector, Brandon, for 5 years and be guaranteed a pension. So at age 62, you've had 5 years in the public sector. You're guaranteed a pension there. So you can easily work in the private sector and then decide to go, and vice versa. By the way, it just depends on what your goals are. And you can do that, and it really doesn't interrupt anything. The only thing that can happen is it can make your retirement more solid. Because you have more solutions now.
You have more options and things like that.
Options are always great when it comes to retirement planning. Always.
So let's pause here for a minute. And Carson, for your company, for you, let's tell the watchers here, the audience here, how can they reach you? If somebody would like to have a conversation with you, touch base with you, what's the best way for them to reach you?
Yeah, the best way to reach us is to call us on our 24-hour hotline,
Okay.
Brandon. We can answer your calls at 12 midnight, 817-719-2988. So you can call right now and begin the process of scheduling an appointment with us. We'll be more than happy to speak with you about your particular situation. You can also visit us, Brandon, at our website at getmyretirementeducation.com.
Okay.
That's getmyretirementeducation.com. Again, that number is 817-719-2988.
Okay. And here in a couple minutes, we're going to do a Q&A, but is there any sort of, before we do the Q&A, any sort of parting words of advice to our audience, just in terms of retirement planning in general? What are kind of, if somebody said, hey, give me your 1 to 2 minute kind of rundown spiel on what you think is really important in retirement, what would you say?
Well, to me, the most important aspect of retirement planning is to seek professional financial advice.
Yeah.
And if you're going to seek professional financial advice, you need to make sure that you're speaking, one, at the top of the ladder is a certified financial planner. And second most, you need to be speaking to an independent fiduciary. And I always highlight the independent part, Brandon, because there are a lot of agencies and a lot of people who give advice that they should be fiduciaries, but they do not parade themselves as such. And banks, and other institutions like that. But if you speak to an independent fiduciary, we can literally outline what is in the marketplace for a person. I spoke with someone last night and they were like, okay, Carson, we're ready to move forward, but we're afraid to pick out these different companies. Where should we go to get advice about insurance? Where should we go to get advice about annuities? Or who should we use? Fidelity, Schwab, whomever it may be as a custodian. Well, an independent fiduciary can map out those solutions for you very easily and help you pick out the top companies that's going to be beneficial for your personal needs. So that would be my main advice to anyone. Seek professional financial advice and get a financial plan.
Okay.
Never rely on a financial product.
Okay. And guys, before we do the Q&A, one more time, the phone number, if you'd like to reach out to Carson, is 817-719-2988. And his website is getmyretirementeducation.com. And let's talk real quick about actually one more thing. So you are in DFW,
Yes.
Is that right? Okay. So what if somebody from Houston or San Antonio is watching this, or somebody refers them to you? How do you handle meetings with people that maybe aren't necessarily close by? Do you do Zooms or?
Yeah, we do Zoom, of course,
Okay.
if we're not, and we're licensed all over the United States. So I have clients in Louisiana, I have clients in South Carolina, I have clients in California. So we're licensed to help our clients anywhere they may be in the United States of America. So Texas obviously is an easy landscape for us to help a client.
Sure.
So yeah, if they need to meet with us, Brandon, we certainly, that's probably the only, if we talk about this, the only positive thing about COVID, that it taught us how to actually communicate over these type of airways.
Right.
But yeah, we love doing Zoom. We've gotten very comfortable in speaking to people and building trust via this particular mechanism of communication. So Zoom, obviously telephone call, and of course face-to-face meetings are always
of course.
Yeah.
Okay, let's see if any of you guys have questions. Let's see, don't see any questions. So you guys who are going to be watching this not live, okay, again, you can go back and we've got Carson's, we got this phone number, we got his website on here. You guys, please reach out to him if you have questions. I know, kind of like me, if somebody wants to come talk to me, even if they're not sure yet if they're going to hire me, I'm still welcome to come have the conversation, or to get on Zoom, have a conversation and see if we can help. I think you feel the same, right?
Absolutely.
So
we're not turning down any conversations to see if we can help you.
So Carson's happy to talk to you guys as it relates to retirement planning in general. Like I said, he is, I think, a little bit of a rare breed in that he does have a specific expertise in federal retirement planning. So that's a really good expertise for him to have for you guys, that if you or your spouse are federal employees or former federal employees. And we do have one question here. Let's see. Okay. Can you speak to Social Security maximization tactics?
Yeah, that's a good question.
Good question.
So on top of being a fiduciary and a CFP, Brandon, I'm also a National Social Security Advisor. So we teach classes on Social Security, and there's so many different strategies around this particular benefit. And by the way, of course, we can spend a couple of hours just talking about Social Security strategies.
Yeah.
Of course, if you're a married couple, you have a lot more to think about than someone who's single. But I would tell people when you're trying to maximize this benefit, again, and I know I can't stress this enough, and it may sound redundant, but you have to speak to someone so we can understand your individual situation. Because most people might know that you can start that Social Security at the earliest at 62. But you should also know that's going to come with a hefty penalty permanently of 30% on your benefits. And then a lot of people do understand that for the most part that if they wait to their full retirement age, they will get 100% of those benefits, which is usually advisable. And if you decide to do even a more unique strategy of delaying those benefits until age 70, that full retirement benefit will increase every single year from that point by 8% per year. So there's not many places in the marketplace where you can have a guaranteed 8% per year growth on income like Social Security. But with that being said, it's absolutely not that simple.
Okay.
You do have to map out your Social Security with your other income sources, your other retirement savings. You do have to understand, we have to understand what your health is like. I mean, do you feel like you're going to be compromised? What are your household income, flow? If you're struggling to get by just trying to get that Social Security to be maximized at a certain level, that may not be the right thing to do. So maximizing Social Security really comes with an intelligent conversation, Brandon.
I like it.
Yep.
All right. Okay, looks like that's it. So you guys, thank you so much for joining us. You guys who are going to be watching this in the future, not live, thank you guys for watching. Thank you, Carson.
Thank you, Brandon.
And I just want to encourage you all to reach out to Carson if you would like to have a conversation with him about retirement planning. But you guys have a good rest of your day. Thank you.